Coming up in this show, I'll bring you my opening comments on the markets. Katie has trade planning with options. She's going to be looking at Boeing. Arby's got a trade idea in PANW. You'll love that analysis. I'm going to show you our level 4 special, non-recurring, with our new MCM Pro and the alert system. And I'll bring you analysis of the stock market, and I'll show you multiple time frame analysis in SPY, showing you a crazy divergence that's going on in the market right now.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market jumped to new high levels last week, lifted by good news on inflation and soaring tech stocks. Indexes moved up sharply Monday and Tuesday, led by, well, NVIDIA and Apple. NVIDIA, that's after its 10-for-1 stock split, got more analyst upgrades, and Apple surged on a deal with OpenAI and now integrating AI into its phones, and they say that's AI for the rest of us. I'm not sure what that means. I have an iPhone, and I use ChatGPT every day, so I won't be upgrading, but they do certainly need improvement because Siri sucks. And it's not like other phones won't also have AI in them, so I don't get what the big deal is right over here. Investors think it's going to bring a new upgrade cycle. I've got questions about that. Wednesday, we saw stocks up early. That was on the CPI that was unchanged. That was much better than estimates, and it got led to the upside by other stocks. Oracle up 10%. And that was a big earnings report and good news on their cloud and AI integration and offerings. And they made deals with Google and OpenAI, who are going to use their chips. Of course, that could be negative for NVIDIA. Apple, again, was up after one big day earlier in the week. It was up another 4.5% again. That was over 11% on the week as buyers are coming in there crazily. NVIDIA again on Wednesday up 4%, both, of course, new highs. That was also the Fed day, and they were less dovish. They said, well, probably only one cut in 2024. Earlier in the year, I said the same thing, maybe a couple of cuts. They say maybe two, but their dot plots say maybe there'll be no cuts in 2024. You would think that would bother the stock market. Well, it did stall on that day, and that was really where it made its highs for the week, but no pullbacks really in any way that are really apparent, especially in those high cap, mega cap, and the indexes that are influenced by that. Thursday, we saw the PPI come out, and that was down 0.2%. And of course, that would be disinflationary. And there was a brief pop to the upside on the market that is widely divergent. I've got so much more to say about that coming up. The S&P 500 and NASDAQ were up while the Russell and the Dow were down in a serious way. And the advanced declines were really bad. Everything that we are seeing right now on Thursday was basically getting sold, except for those indexes which did have good gains, the S&P 500 and the NASDAQ, but gold was getting absolutely slammed, and Bitcoin slammed. There were a lot of things that were going down on Thursday, while just those couple of indexes were going up. Friday, we see a mild correction going on. It's still super strong, being held up by the NASDAQ. And we have a market that is mixed right now here at midday, but the Russell is getting slammed, and the Dow is very weak also. And we have the advanced declines right now at 3.5 to 1 to the downside. So a market that overall is very weak, but these broad market indexes are disguising that. The stock market is in a period of extremes, seeing these wide divergences in index, with the upside led by megatechs in the conditions of negative breadth. At the same time, large cap equity funds have the largest outflows that we've seen in 18 months. And the bond market is seeing inflows. So where money is moving out of the stock market and into the bond market. And also, that's moving into fewer and fewer stocks. But overall, investors are selling and lowering risk. And that is really disguised in this market. We have a situation where we have to look at this slide again, as we have shown this a few times in the past, looking at the market cap to GDP, and it is historically very high. And there is huge risk right now in the market based on valuations. You see here in the 2000 peak, the market cap to GDP was 137%. And of course, it got absolutely killed after that dot-com bust. Here in 2007, you could see it was only 107% of GDP. And of course, that was the great financial crisis there, so the market got killed right after that. Here in the 2021 peak, also led by tech stocks, on the upside, it was 194% of market cap to GDP. That, of course, brought a market pullback that was not quite like those other ones that we saw back there, but still pretty significant. And now we are 190% market cap to GDP. That's based on the Wilshire 5000 to the GDP ratio. And, well, some would say, well, the market's going to grow into that. Well, that you can see that doesn't happen, and GDP is slowing right now, so you're not likely to see GDP supporting this extreme overvaluation. You're not likely to see earnings supporting these extremely high PEs, other than in the few stocks that we're seeing benefiting from this AI mania that we're in. And this is a condition of a lot of risk when we look at this. So important to look at this very significant graphic right over here. This market is extremely overvalued. So all of these warnings come at a time when our work, the technical aspects of the market, are still positive, mostly when we look at the S&P 500 and the NASDAQ. S&P 500 got into our target zone, 5,400 to 5,535, and that, of course, is revised because in January our target was only at 5,100. We were bullish for this year. We thought it would be a bull market, but this has really gotten well beyond what our initial targets were. And we have to, respect the positive momentum that we see in our indicators and chart structures. And we always talk about that. We're going to be agnostic. We're going to look at the markets consistently in the way that we do, and not prematurely anticipate anything. It's just not the way we approach markets. Still, we have to be, if we're positive, it has to be very cautiously positive right now, because we're watching closely for other indications of a market top. We just don't see them yet, but I think it's soon, based on a lot of things that I'm going to show you coming up in the show. So the risk rewards, based on everything we just discussed, must be considered poor for the intermediate term. In other words, the amount the market could rally versus the amount it could decline, I think that's risky. And we are looking, based on our longer term analysis, for a decline into the summer. So when I do my big picture analysis in July, you'll be able to see that for level 1 to 4 members. And I'll be talking about a lot of the markets and the bigger picture analysis out into the end of the year. This week, here we are at midday, stocks are widely divergent again on the day, with the NASDAQ up on the day, the Russell getting killed, the Dow down. For the week, the S&P 500 is up about 1.5%, the NASDAQ up about 3.5%, while the Russell is down 0.75%, and the Dow down about 1%. So you can see that divergence in this weekly result. Bond market, money moving from stocks into bonds. And we were bullish on bonds. Matt last week did a fantastic video on the bullish setup in TLT, the 20-year bond ETF, and that worked out really great. For the week, the 30s up strongly and the 10-year yields down 22 basis points to about 4.21. And this is very much in line with our projections. Gold market, was liking that dip and trying to get a rally back, liking the dip in interest rates and trying to get a rally back from last week, so it gains $35. Silver about unchanged. They're in a wide chop right now, and I think they are in a corrective period that still has some time to go. And you can see that in our Future Speak show. Again, watch Future Speak for all of this analysis on futures and indexes every Wednesday. RV does a fantastic job on that for members level 2 through 4. Dollar, it moved up as the euro moved down on their elections there and political turmoil going on. I don't think that's going to last. The dollar did gain 0.7% on the week, but I think it's going to reverse in this next 1 to 2 weeks, and we'll see the dollar falling and the euro rising. Oil gains about 330 on the week. It's in resistance. We thought it would get a pop up into this resistance sell zone between 80 and 82. And now I think it's getting ready to test the lows that it made, get back to the downside for a couple weeks. And we'll see if it can get back to that 72 level. Overall, I think it is making an important bottom in these next few weeks. So we'll look for a pullback from this resistance level, short-term sell. And then we'll take a peek again. Bitcoin, I never talk about Bitcoin in this section right over here, but I have to say something because Bitcoin down about $2,600 on the week. It has a short-term breakdown that is very significant. It is set up for a potential decline of some significance in these next couple of weeks. Watch this on the downside. Again, RV will bring that to you on Wednesday in the Future Speak show. That is my opening comments on the markets, and we're going to move forward with so much great information right now. Make sure you learn about askSlim. Go to our website, askSlim.com. Sign up for Snapshot Lite. You'll get every day a report that Matt puts out looking at the S&P 500 with our analysis in there. You will love it. Snapshot Lite. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. And on X, follow us at askSlim. And for any information that you need about our memberships, education, and analysis, write to Matt at askSlim.com. This is Trade Planning with Options. Katie's going to bring you a great bullish idea in Boeing. She combines cycle analysis with option strategies, and she uses that Tasty Trade platform, which you can sign up. She'll show you how to do that right on our website. Benefits us, helps you, and we really want you to open up an account at that great brokerage because their platform is fantastic. She'll show that to you.
Hi, this is Katie with askSlim. This is Trade Planning with Options on June 13th, 2024. Today I'm going to show an options trade idea in Boeing. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's first take a look at the weekly chart of Boeing. We have a 32-bar average cycle length, and we believe that Boeing made its prior cycle intermediate low right here. We got this upturn in momentum with the reversal scout turning green. That's our proprietary momentum indicator, and that helped us to confirm that intermediate low. We are projecting only up to the bottom of the resistance zone at this time, and that is because the prior cycle was negatively configured, meaning that it ended lower than where it began. So the bottom of this resistance zone is right around that $200 level. Now this week we have retraced a bit to the top of a support zone as we are expecting a short-term low to form. For that, let's go and take a look at the daily chart. Now here on the daily chart, we have a 35-bar average cycle length, and Boeing has entered the daily cycle timing window. That is this period of time between these blue vertical dotted lines when we expect Boeing's current daily cycle to form a trough and then move up into the rising phase of the next cycle. Momentum on the daily chart is mixed. We have a reversal scout that has just turned over, and our slim ribbon is still green, showing positive momentum. So we are going to be looking at a bullish trade idea. So the ideal time to place that would be once we have some positive price action in this time frame that indicates that our short-term low is forming. We don't have an indication of that yet, but at that time, our target is going to be this area from the prior cycle high at 192.63 up to $200, which is the bottom of that resistance zone on the weekly chart. We are going to go over to the Tasty Trade platform. If you are interested in that platform, please go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about them. And if you open an account with them through our link here, that will help you with a special bonus, and it also helps us, so please check that out. Here is Boeing on the Tasty Trade platform. Notice that the IV rank is elevated at 35.7. That suggests a short premium strategy would be appropriate because a contraction in implied volatility helps those types of trades. I'm going to use the July 12th expiration cycle to avoid earnings. This purple ribbon shows earnings on July 24th, but that date is not confirmed. Other platforms are showing different dates. So let's open up that expiration cycle, and for a bullish short premium strategy in a relatively expensive stock, we can do something like a short put spread. That's the sale of an out-of-the-money put and the purchase of a further out-of-the-money put to define our risk and reduce our buying power requirement. Now, as far as which put to sell, the bottom of our support zone is at just over $172. This has $5 wide strikes, so let's sell that 175 put. Now, to buy an out-of-the-money put, I'm going to demonstrate a $10 wide spread, but you can make yours as narrow as $5 or up to about $25. Going wider than that uses the same capital as just selling a naked put. So I'll buy this 165 put. This nets us a credit of $1.95, right around the $2 mark. I would probably penny it up to $2 and then just wait and try to get hit. Now we have a probability of profit of 71%. We're picking up just shy of 20 long deltas and a daily theta of $3.30-ish. If we take a look at our risk graph, you can see what you want to have happen. You want Boeing to stay above your short strike at 175 and for time to just tick away and for a volatility contraction. Now we are going to wait to activate this trade idea until we do have some indication of a short-term cycle trough forming. So members can watch the cycle low timing tracker for that. And I'll also post on Discord and update the options trade idea tracker when we activate the trade idea. That's our options trade idea today. As always, you can reach me on Discord or via email at katie@askSlim.com if you have questions or feedback.
Trade ideas, Ari does this all the time. Does lots of them for our members. Every once in a while, we bring one here in this show. He's going to show you PANW alongside trade idea.
This is an askSlim trade idea video walkthrough for a short-term long in Palo Alto Networks. That's symbol PANW. On the intermediate term time frame, what's most interesting here is first you can see a very clear sell-off into this key trough. That trough is due 3.4 to 5.13. Then you're seeing a shift in character back to the upside here. A higher low that is now poised for another move back up through this old swing high, 324.68. We're targeting a move into this zone, 334 to 354 or so on the intermediate term. Solid action off the low, and I do like this higher low that is now formed on the intermediate term. Jump over to the daily chart, you will see that we have fairly clean cycle action here. This is a 34 bar cycle bracket that is overlaid on the chart. A low that is due 521.264. You're seeing a bullish basing cycle. To learn more about bullish basing cycles, please take Slim's cycle workshop. He covers all of the core foundational aspects of our askSlim methodology in the cycle workshop. So if you're interested in learning more about that, please go to the askSlim.com website and click on workshops. What we see here in the short term for Palo Alto Networks is we're in a rising phase. You can see the slim ribbon has now turned positive. The PO, which is available for level 3 and 4 members at askSlim.com, has also turned green. We're watching for a modest flag to form for a test of this zone here from right around 310 to 301, and then for this to turn right back to the upside and move towards this zone here from 333 to right around 345 half or so. There's a minor 78.6 fib here at 295. If it moves through that level, that would render this idea no longer valid. So we have a risk on this trade idea right around 1450 or so, targeting a move of about 23 bucks on the upside. Okay, so this is our setup here for Palo Alto Networks. If you have any questions, feel free to post them in chat. If you'd like to get more of our trade ideas and see our proprietary charts directly on your Thinkorswim platforms, please go ahead and sign up for a non-recurring trial of level 4. This is our last week. It's only $99, and you can do so right at the banner at the top of the askSlim.com homepage. Thanks again, and I hope you guys have a great day.
This is our level 4 special trial. Final weekend on this. This is for first-time subs and upgrades. You're going to love this. This is a 1-month trial, non-recurring. That means you get this huge discount, 37%, for only $99, and you're going to get everything we have on levels 1, 2, 3, and 4, and our new pro version of the market condition monitor with the new alert system. It is fantastic. I'll show that to you. You can learn more by going to the top of the website at askSlim.com. Questions right to Matt at askSlim.com. So go click that Learn More button. In the meantime, this is what the market condition monitor looks like. You can just toggle your own trading style and then see the trade setup conditions on over 115 of the widely held in here, stocks, ETFs on futures. It's just unbelievably great. And you'll be able to toggle here trade setup condition. You'll be able to see which are bullish, which are very bullish, which are bearish, which are very bearish, based on the way that you look at the market. This is our really next level proprietary analysis. We're always developing great things for you, and you will get our alert system. This is you install this on your desktop, and you can set your alerts based on the conditions that you want to see, based on the symbol that you want to look at, and it's just fantastic. Just use this little way to create these alerts. You can see this is SPY set up for intraday, and you want to know when it's very bullish. You hit create, and that then does give you that alert. It will come up on your website, on your desktop. Alerts. It's just amazing. Now I'm using that. Here's mine right over here that you can see. I have all these alerts set up, and when they hit those alerts, it then warns me when things are changing. You know, Apple's been one of the strongest, so I set up one in here for Apple that you can see, and right now it is neutral. I want to know when it goes to slightly bearish on the near term. So that it will signal me that it is weakening, and then maybe I'll have a sense that the stock market is beginning to weaken. So could have set that up for any of these stocks in here. Just absolutely fantastic. And when these things click off, it comes up on my alerts on my own desktop here. So this is incredible. All you have to do is sign up and try this out. Non-recurring, $99. You get everything in all of our levels. Everything that's on here are proprietary studies for the TOS platform, with our live charts, also with all of our work on there. Tons of resources, as you can see here, and our MCM Pro version now with the alerts. Incredible. $99. It's non-recurring, so if you don't like it, don't worry. It's just it won't charge you again. If you do like it, well, we're going to offer you a special again so that you could sign up for 3 months following that. A great opportunity for you Level 4, sign up now. Go up to the top of the askSlim.com website, click that Learn More button, and if you have any questions, write to me at askSlim.com. Stock market analysis and projections. We're going to look at the S&P 500. Before I do that, make sure that you read this slide. This talks about our approach to the markets, our analysis, and how you then would use that analysis for your own trading, and the important aspect of trade ownership. No matter what we say, no matter what you hear from anybody else, if you want great success, you have to own the trade. You have to manage that trade and decide the amount of risk and decide when you get in and decide when you get out, and use the information that other people give you as a guide for you. But it has to be your own trade. That's really what is very important. Stock market analysis, S&P 500. We're going to look at that SPY and all of our charts for with our proprietary studies that level 4 gets. Now, if you didn't see that special that we have for level 4 right now, it's just $99 non-recurring. Go to the top of the askSlim website and you will be able to see that special with our new alert system. So fantastic. Let's take a look now as we switch over to the charts. This is the SPY, S&P 500, weekly, daily, a daily with our momentum indicators here, and a 2-hour chart. I always look at this multiple time frame information because it's important, because it has our option bias study on there, our slim ribbon PO on there, and our market condition indicator on there. A great way to have our proprietary level 4 studies up on your screens, and I think this is extremely valuable, and I'll show you why. Let's first look at the weekly on the S&P 500 as I blow that up. Now, there's little arrows up on the top here. I can just scroll across and look at all of those charts right there just by clicking a button. So I want you to see how that works and how easy this is. This is the S&P 500 cycle analysis, and you want to learn about cycle analysis, go to our workshop tab, and there's a free video in there. This is the rhythms of the market. This is the heartbeat of the market. It is the periods when money is coming in or money flows are positive, and the periods when money flows are negative. There's nothing, metaphysical about this. This is science. This is money being able to see visually the money coming in and money coming out, and we do we turn it into an art form for you to get these great visuals and hear and really understand the market. This correction right over here, you could see was beautiful. 2 cycles pushing to the upside, and then only a modest correction. That's what we call the swamp cycle, because this was so strong it would not let the market come down. Once the momentum turned down, and that's our reversal scout right over there, it then tells us, well, they're both going to move down together, and you could see we got this correction in here that was 10.9% in the S&P 500. This correction over here, you see it came later. So this was called a right-hand translation. It translated very strongly, with the peak well above the trough, well above this trough, which was well above this trough, which was well above this trough. That's what defines an uptrend, of course. And this advance right over here lasted a long time. The correction we thought would be 5.3% to about 8%, ended up at 5.9%. We thought it would be shallow, and that was correct. And then we said, well, it's likely that the next rally goes to a new high, and that's what happened. Again, we had the reversal scalp turned down here. You went into the correction, and the reversal scalp turned up right over here and in this rising phase. This is a strong market, as you can see. You note the yellow zones. That's where those corrective phases are. That's where there's downside risk for a potential large drop. That comes way out over here in Q3 and Q4 for the stock market. What we're looking for more likely is a more shallow decline out over here into the summer months. This takes you out into July, August, right over here for a corrective period. But we have no top yet, no sign of a top yet, other than what we're seeing in some of these other indexes, where we see the weakness coming in the Russell and the weakness in the Dow, while the at the same time, very negative breath going on, but the market being held up by a few stocks that are heavily weighted in the S&P 500 and in the NASDAQ. By the way, the S&P 500, right now, the top 10 weighted stocks equals 35% of the indexes. That is the largest number in decades and shows you the narrowest leadership that we have seen in decades. And once those stocks begin to correct, well, the stock market will be very susceptible. That's why I think this summer pullback will be deeper than what this modest pullback was over here, because the market is very top heavy, and those stocks are likely to get into a correction. So right now, this is positive. We don't see anything here that looks bad on the S&P 500, but I'll show you some comparative indexes in here. SPY weekly, still strong, configured strength. One thing to look at is this level right over here. This is the monthly extensions, and these are resistance areas right in here. They're also targets, and you could see that it got right up to that level. It's going to have a hard time based on the valuations that I showed in the beginning of the show. If you skip that, go back and watch the beginning of the show, and I show you a very important valuation chart. So go back and watch the whole show. A lot of you scroll forward or are just watching a clip here. So it's important to watch the entire show. This area is a tough area, and when you look at the crazy valuations that we have right now, it's hard to make a case that there's a lot of upside left in this stock market. So that's a look at the weekly. This is the daily. Now you can see the beautiful rhythms in here. I mean, just brilliant how these cycle patterns resolve themselves. And this was a very positive period where you have a positive slim ribbon, positive slim ribbon, positive slim ribbon ended right over here. Also, the reversal scout in here was positive the whole way up and then turned down. Reversal scout is more sensitive, so that will give you the first signal. And then we went into this corrective phase. Then they turned positive, as you can see right over here. And, only had a modest little dip right over here. Slim ribbon stayed positive that whole time. And that is telling you the conditions of the market, how great they are, how good they've been. And over here is the option bias study. This was developed for option traders to be able to maneuver their position so that they don't get on the wrong side. Option traders tend to like to fade the market, get into bad positions, and then roll option trades that keep getting bad. And we wanted to develop an indicator that helped you not do that, that helped you stay on the right side of the market. And you can see this option bias study is that. When it's at P3 or positive 3, it's the most positive. When it's at P2 or N2, it's a little bit overbought or oversold. And when it's N3 right over here, it is very oversold and very, very negative. To be very oversold, it would create an orange dot, which there's none of those right in here right now. And that is a pending extreme because of pending reversal because of an extreme. We don't have any of those on this chart right now, but that really helps you. We also developed this cloud right over here in order for us to see how the strength is taking it up through into the resistance or support areas. And you can see here that this top channel right over here got right up to that level of resistance that had us put in even another upper channel right over here. That's the S&P 500 resistance that we set up around 550. On the SPY, this is that 540 something. Got up to 544. So this is that area that we think is going to be very difficult to move up through. And this is a corrective period in here that we think will bring it down into kind of this middle support area. So this support right over there is is around 534. This is at around 531. And that's pretty reasonable to get a correction into out towards the end of June, beginning of July. When we look at that, if it were to come down to this level, that's the 78.6 at 523, it would warn us that the next rally is not likely to get as high as this one did. If it broke this level here at 518, that's where that cycle low was, it would tell us that the intermediate peak was being set. There's no way it could break this level unless the weekly chart was giving way. In other words, the upside pressure from the longer time frame is alleviated. And that would tell us that by how deep this can fall. That's the importance of setting this up, because there's huge messaging for us. And right now, as it got up through these levels, this level right over here, which was the peak, which was a high probability it would, and then, continued to move up here, it set a positive structure. And that's what we're in right now, is a positive structure with the highest probability that it kind of takes this track down over here into this support area, and then has another rally after that. Again, if it's weaker, it'll give us a message. If it's stronger, it will give us a message also. This is what the highest probabilities are right now that we're looking at. And again, the option bias study, P3, telling you the long side is the right side for the option positions in SPY. Now let's move over to a comparative chart we want to do. This is the SPY on a daily chart, but we're looking at it with the slim ribbon and an area chart on the slim ribbon, with the slim ribbon PO on the bottom. This is a free indicator, the slim ribbon right over here, that you can use on Thinkorswim if you want to do that. You can get the script for that from us. It's also available on some other charting platforms, TradingView, Wealth365, and tastytrade, of course. This is a proprietary indicator only available through us for Thinkorswim for level 4, and this tells you when it's green, the slim ribbon is positive, and when there's a resumption of upward momentum, it's fantastic. I mean, you can see here's where it turned red and was warning you of a corrective period. Here it turned neutral again and then green again with more upside momentum, and it is still very positive in here. I'm going to show you some comparisons here that I think are important for you to see. So, just keep in your mind what this looks like, and I'm going to look at QQQ. Again, these are daily charts, so you can see it's pretty similar right now, where it's been positive. You've gotten these positive signals, and the QQQ has not given any real ground in here. The market has been quite strong, looking at that momentum, quite strong. Now, earlier in the show, I discussed about the divergence and about market breadth being negative, and about the IWM, which had a fake move on Tuesday to the upside and then came back down. Let's take a look here at this IWM. My screen is a little bit frozen right now, so I'm just waiting for that to come back. And we'll move to IWM and look at this. This has now turned negative right over there, and it is giving you this negative momentum conditions. It turned negative here, right there on June 6th, and so this is now June 14th. And giving you the warning in here that it was weak. The slim ribbon then becomes resistance area. This was that big pop here on Tuesday that it completely gave back and is even in much worse condition. We got confused by this clearly, because it looked like it was getting better on that pop and then gave it all back up. But momentum is the story, and it just told you how negative that is. So we have that negative condition in the IWM. And then look over here where I look at $DJI at the Dow, and you can see in here the Dow also quite negative, and even giving you that downside resumption on June 11th, telling you that it was likely to continue to the downside, and that's really what we have. You can see how positive it was and all these great signals here for the long side, and how this is turning negative. So again, when you look at that and you compare it to the SPY, you can see in here, man, that is really a huge divergence. And looking at negative breadth here, I'm looking at the stock market right now. The breadth is 3.5 to 1 negative. 600 advances to the upside, and over 2,000 declines on the downside. It's a very weak overall market that is being disguised by these few stocks that are very strong. And I was looking for the potential for breadth to improve, a rotation to occur into the broad market. That is not happening. It's even getting worse. So that is something to be concerned about. Let's look here at the 2-hour, and this is important. This is the market condition indicator. You can see how positive that is right over here. and looking strong. The slim ribbon in here looking strong. That was June 4th, where it turned positive again after having a modest correction and then moving continuously to the upside right over there. This market condition indicator right at 100. It goes from 100 to minus 100. This is not an overbought or oversold. This is the conditions of the market are still super strong. When this turns negative, it will move down through the swing zone, 25 to minus 25, and it will move down through that, and it will tell us about negative conditions there in the stock market. This would be the first of the dominoes to fall when that turned weak. Comparatively, look here at the IWM, and you can see that this IWM move through the swing zone here. This is your test of it right here, your negative move right over here, and it has since continued to move down. The slim ribbon PO giving you either neutral or negative readings this whole time. It's negative right over here, and this is really important again because this tipped us off right here as it moved through here. This is the market condition indicator, level 4 indicator that you can have. You can have, of course, all of these indicators by taking our special on the S&P 500, our special on level 4 for just $99 non-recurring. You get all of that. I'll tell you about that in just a few minutes. So that is a look at the S&P 500. Again, positive there on the daily, positive on momentum, and on the, that's still the IWM. Let me just move this back to the S&P 500 here, and on the 2-hour positive right over there. So this conditions of the S&P 500 positive, the NASDAQ positive, and the other markets negative. And it's really strange to see this wide divergence. Again, watch the beginning of the show if you didn't watch it. I talk a lot about that, show you some important chart on market valuation and the likelihood that we're going to see an issue in the market here as these once these mega caps get done with their just insane surge that they're in right now. It will likely turn the market significantly weaker because they weigh so much in these indexes. So that's not the case now. This is still on the positive side for the S&P 500. Don't miss the opportunity. This is the final weekend for our MCM Pro, just $99, and that's non-recurring. So if you want to stay with it, we'll be sending you a special, 3-month special to continue. If not, you won't be charged again. You get everything in levels 1, 2, 3, and 4. Just absolutely fantastic, including our MCM Pro, which has our new alert system in there. So you will find it fantastic. If you want to learn more, just go to askSlim.com and click that Learn More button. Matt has a great video out there right now for you to be able to learn all about it on YouTube. Go to YouTube and watch that video, and he'll teach you all about our new alert system and the Pro version of MCM. Just $99 now for level 4, non-recurring. That's it for the show. You want to get acquainted? Get our Snapshot Lite for free. Go to askSlim.com and sign up for that. No credit card necessary. On YouTube, subscribe to the channel, click our notification bell, and do like this video. Give it a thumbs up. Watch our member videos in the playlists, and on X, follow us at askSlim. Any questions you have, write to Matt at askSlim.com. I want you to be so careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to say